Greetings, my friends. I wanted to show you a trading recap. I wanted to go over some of my most profitable tickers this year, some of the worst tickers this year, and then I also wanted to give some trade ideas and then briefly cover the markets. I've got my buddy Peter over here, and he's just chilling. Peter Pamper. The markets have been bullish lately, so it makes sense that, he's going to be hanging out here. He just stood up as soon as I started talking. And yes, my armpits are shaved from the swim meet. No, they don't get itchy. That's why I shaved them for those final meets. But let's get into the trading recap. I first wanted to cover AIRM stock. And AIRM IPO'd a few months ago. What was it? Early September. And it's been a really good moving stock. So it moves really well. It has good breakouts on the intraday. It has good follow through on the swing trade. And I wanted to cover some of my trades on it because I think there's some valuable lessons. So the first day, it just had IPO momentum. And so I went long and just did like a little trail stop. And then the next day took profits. So first trade on AIRM, a nice little win. Then AIRM started to really break down and we started to vibrate. Now notice, whenever you have an IPO, mark the initial IPO price. So that's about 55, 56 on AIRM. That can kind of be like a pivot to risk off of or take trades against. So initially, AIRM, came back up to its initial IPO price. Boom, go short or buy put options and then take profits. Then what AIRM did later was once it was starting to confirm that its initial IPO price was resistance, then it's starting to form a little bear flag. It started to drop and then boom, go short, take profits right into that flush. And that was really awesome because when you're catching the breakdown, you just have so much momentum on your side and it sets up another trade later. So AIRM came back up to the bear flag range, shorted again, take profits. So AIRM basically all year has offered really good setups. Then it did a little inverted head and shoulders pattern where you have the left shoulder, head, right shoulder, and the neckline was the initial IPO price level. I didn't take this trade, but it's just something to note that AIRM changed its directions from bearish to bullish. And the inverted head and shoulders in most patterns, it's not so much the pattern is the setup, it's the psychology behind the pattern. So basically it's bears making a lower low, but then not getting a lot of follow through, and then buyers taking control. So that's kind of like the psychology behind these patterns. And then lastly, the last trade on AIRM was this daily bull flag. Nice good rally. Long consolidation. I set up some long trades over 65 and took profits into the high of day on Friday. And so this was really cool because if you go to the 5-minute time frame, you can see us a little bit better, but nice little flag break right here, buy right there, take profits in the high of the day, TP. And these are all alerted, by the way, in the Legion. Then right over here, buy, and then take profits into the second high of the day. So AIRM, really good to day trade and swing trade moving forward. And if AIRM can come back above these highs, I wouldn't be surprised if it made new all-time highs. So while AIRM was my best ticker this year, QQQ was kind of my worst ticker. I did not trade the broad market very well this year. And it's just because I was just a little bit slow on flipping sides. So I want to cover some of these trades on QQQ that I took earlier this year, mostly in the last, 2 months. So right here, don't mind that. Right here, we have this kind of like breakdown setup. I short the breakdown. Notice how we kind of rise on an increase in red volume. That's kind of confirming the sell-off. And we got a nice good flush the next day. I took half profits off, but I left the second half of those put options ride. And the second half of those put options had to stop out for a decent sized loss. Then it was kind of tricky because there's a lot of news coming out. But, in hindsight, there was a lot of good buy setups on this part of the run-up. But eventually I took another loss on the Qs, shorting this. This is like a dragonfly doji extended into this supply zone where we had previously rejected. And I just had to stop out once we really started to break up. And so really I'm kind of like, I was going counter trend a lot on the Qs this year, and I could have done a lot better just flipping sides. And that's just something that I really needed to come to terms with and realize that I trade individual stocks better than the broad market. Some people will trade the broad market very well, but not so much individual stocks. So just keep track of what you do well and do more of that. One last stop out on the Qs over here was a QQQ put butterfly. And we had this channel right up here. We're making higher highs and higher lows, but volume was kind of goofy. You know, things just looked a little bit extended, and I went short again. Right over here, QQQ put butterfly. Not crazy size or anything. What's cool about the butterfly trade is I was risking $300 to potentially make about $1,200. And that would be if the QQQ ETF came all the way down to this 370 area. So that was kind of the idea. And what had happened was, you know, it was about to flush. We closed near the low of the day on this day. I was like, yes, I was licking my chops. And I was actually willing to add, but I actually didn't add. I'm thankful I didn't. Just something seemed a little bit off. I was thinking maybe I could add the next day on a gap down, and no, just gap up, close near the high. Gap down, close near the high. So basically, I cut that as soon as the Qs started to reverse. So that's something that I could have traded a little bit better, as in if one way isn't working, it's okay to potentially not trade it at all or be willing to flip sides. Okay, so that's the QQQ. Next up, this was some trades from today. So Roku, this one was a tiny, like normal trade, nothing too crazy, but Roku kind of consolidating in this range. We break the range and we started to really break down right about here. Short Roku right there, and is with bear call credit spreads. So you're actually making money, not just from the stock dropping, but also from theta decay. So it's kind of like you're shorting at a higher price, but your risk to reward isn't as good, but your probability is better. I'm not going to get into bear call credit spreads today. Besides that, I took Roku off at the low of the day today, not so much because I'm trading Roku, but the Qs were flying today. So you want to use the broad market as context for your take profits or your entries or your exits, because the Qs were starting to make a, little cup and handle. It was starting to kind of make that little U shape right there. And I was like, ugh. So took the quick profits on Roku today. And that's just a lesson on using the broad market to help you exit. Okay. So that was Roku, basically going short at the breakdown and actually taking profits pretty much at the entry, but it was actually a small win because I'm getting that theta decay. Okay. So another day trade today was ANET. And I really like this daily chart. So take a look at this daily chart on ANET. New all-time highs. And really starting to break up. It actually had a diamond pattern where we're kind of making higher highs, but also lower lows. It's kind of like a broadening formation with a pennant. And usually these actually flush really hard, especially when you get that volume spike, and they flush fast. So memorize the diamond pattern, but this diamond pattern broke up on a slight increase in volume. I'd say that's just okay. But it was making new all-time highs, and I love buying new all-time highs. It's actually one of my favorite setups. There's an old video back in 2020, and it has AMD on the cover, and it says my favorite trading setup. And the all-time high breakout is one of my favorite setups because all-time highs tend to continue to make all-time highs. So that's something to consider. And so it was making new all-time highs. Okay, now let's look for an intraday buy setup. And this was just a simple one. We got a nice little pivot. You could have bought the, the opening range high breakout. That's fine. But I preferred to buy this little pennant right here. Stop loss goes right underneath here. And then take profit right here once we start to show a little bit of a shooting star. So ANET, I wouldn't be surprised if it continues, but it is starting to put in bearish divergences. So it's making higher highs in price, but lower highs on the money flow index. And the money flow index is kind of just like volume multiplied by RSI. So it's kind of like a combination of volume and the relative strength index. Okay. So that's ANET. And lastly, AIRM. This one I really enjoyed. So pay attention to this. So AIRM first was noted in Trade Ideas as a little pennant breakout right over here. Look at this. Beautiful breakout on an increase in volume. AIRM from the 27 area. Rallied about 60%. I just took the quick profits, literally up to 30 for like a 17% gain in one day, but it got really extended. And when it's really extended, I'm kind of thinking, okay, where can I find some mean reversion, especially when it's really, really extended? So in this scenario, this is called the dark cloud cover candlestick formation, where you're gapping up and then you're closing and you're piercing into the prior day's candle. This usually signifies lower prices, but on the intraday time frame, if you look at the 5-minute chart, notice we have this flat support here at about 42, and we're really starting to break down. I went short, bought a firm put spread. You could have bought puts, you could have shorted shares, whatever. And notice the increase in volume on that breakdown. Stop loss can go above here or above the high of the day, and just beautiful drop. I didn't catch the full move, but I did go from 40 to 42. So this is a cool trade, breakdown, quick little retest, increasing bear volume, take profits into the extended flush. And if you wanted to hold, you get another little consolidation, drop base drop type of formation. So that's cool. I wouldn't be surprised if a firm dropped just a little bit more. Maybe it has another, 5% at most downside, but if not, it can go sideways. And if it can go sideways for a while, maybe it sets up another move higher, but I'd look for other stocks. And speaking of other stocks, I want to reward you for listening to me talk about my trading. Hopefully you learned something new about how my mind kind of looks at the market. It's not always perfect. I've never claimed to be the greatest trader in the world, but I'm certainly not the worst. And moving forward, when it comes to new setups, take a look at Carvana, CVNA, rally, flag. Can we get another rally? A lot of stocks have been going through squeeze formations, a lot of these small cap stocks. So take a look at Macy's. This is kind of a similar setup where you got a little flag, and sometimes they'll just gap up. Sometimes they'll break up intraday, but that's an idea. CVNA, long. And this rally-based rally measures up to like 53. I'm not saying it's going to go to 53, but even like a chunk of that move is good. And what's cool about squeeze formations is that you just do a trail stop, like an hourly trail stop gets the job done. That's what keeps the squeeze alive, is that each higher low traps more and more short sellers or bearish trades. So that's CVNA. Romulus brought this one up, and ABR. This could be a potential position trade, starting to break out on a slight increase in volume and pays a decent dividend, 43 cents a share. So ABR, and the options are liquid too. BRX is another one. So BRX, if we take a look at this, starting to potentially break out, pays a tiny little dividend. And again, with most of these, you can just trail stop them on the daily or on the weekly. That's the easy risk management technique. Wheat is an interesting one. Wheat, traded this one long actually from the break of like 575, took profits at about 608. Now looking for a reload somewhere around 560 on wheat. And I wouldn't be surprised if wheat, can hold this support. Maybe it can start a new longer term uptrend and maybe get into the mid sixes, maybe even sevens or eights. So wheat has a decent amount of upside, in my opinion, 20% plus, if it can hold 557. Okay, so that's wheat. VMC is another one. Simple. Daily chart starting to break out. Slight increase in volume. Super simple. Another one is Tesla, TSLA. And this one's tightening up. So Tesla, bullish over 246. Stop can be underneath 231. That's a wide stop. Maybe you want a tighter stop. The choice is yours, but Tesla long over this breakout formation. You could go short if it breaks 230. We'll see it. The market needs to help that trade out if that's to play out. And then lastly, oil. I'm still bearish oil. And this has been a really good trade in the past few months. Drop, kind of descending triangle, breakdown, get short in this consolidation, breakdown. Now, if we get overbought into this kind of supply area, call it like USO, like 71, maybe 70 to 71 US oil, that could be a potential short setup for oil. Okay, so those are my trade ideas. If we're talking about the broad market, SPY is about $3.50 of an expected move tomorrow and about $6.50 into Friday. We do have some bearish divergences into these new highs, so we'll just have to see how CPI actually plays out. So yeah, goodbye. Peter says, thanks for watching and thanks for being a part of our day. All right, peace out.